So very good morning everyone. Let's quickly take a look at few important illustrations from Ind AS 37 which is going to be very handy for you. First one is X telecom number as income tax litigation pending before appellate authorities. Legal advice's opinion is that X telecom number will lose the case and estimate that the liability of 1 crore may arise in 2 years. The liability is recognized on a discounted basis. The discount rate at which the liability has been discounted is 10% and it is assumed the discount rate does not change over the period of 2 years. How should X telecom limited calculate the amount of finance cost? So nice question, but the beauty of this kind of questions is you must revise it once, then only you'll be able to get the answer spot on. That is the main reason we can sharing these things. So if you see the discount factor of 10% for 2 years is 0.826, and hence X Telecom will initially recognize the provision for rupees 82.6 lakhs. Next is the discount factor of 10% at the end of year 1 is 0.909. So the provision amount will be in that case rupees 90.9 lakhs. So as per the standard, the difference between that is 90.9 lakhs and 82.6 lakhs should be recognized as finance cost in the end of year 1. So that is rupees 8.3 lakhs will be recognized as finance cost. Now moving on to year 2, the liability now is rupees 1 crore. So the difference between rupees 1 crore and 90.9 lakhs, I repeat, the difference between 1 crore and 90.9 lakhs, so 9,10,000 will be recognized as finance cost in year 2. Lot of chances for this kind of questions coming in two questions in MCQs, and also 4 mark, 5 mark question, and also possible question 6. So make full use of it. So moving on to the next illustration. X Packaging Limited has two segments, packaging division and paper division. In March 2021, the board of directors approved and announced a formal plan to sell the paper division in June 2021. Operating losses of the paper division are estimated to be approximately 50 lakhs during the period from 1st April 2021 to the expected date of disposal. Management of the X Packaging Limited wants to include the future operating loss of rupees 50 lakhs in a provision for restructuring the financial statements for the year ended 31st March 2021. Recommend whether X Packaging Limited can include this operating losses in a provision for restructuring. So the standard specifically states that provision should not be made for future operating losses. So since Ind AS specifically prohibits it, X Packaging Limited should not account for this as a future operating losses, since provision should not be created for the same. So this is with regard to illustration limit. Moving on to the last next illustration. Illustration 2. This is again a beautiful question. A straightforward question but good concept question, so pay full attention. X Metals Limited had entered into a non-cancelable contract with Y Limited to purchase 10,000 units of raw material at 50 per unit at a contract price of 5 lakhs. As per the terms of contract, X Limited would have to pay 50,000 to exit this in contract. X Metals has discontinued manufacturing the product to use the said raw material. For that, X Metals Limited has identified the third party to whom it can sell the raw material at rupees 45 per unit. State how X Metals Limited should account for this transaction in its books of account in respect of this above contract regarding to this the non-cancelable contract and also the discontinued manufacturing. This entire scenario, how it should be accounted. So that is the question. So it indicates, first thing you should write is the above circumstances as per Ind AS 37 indicate it is an onerous contract. So that is, this itself will give to understanding to the examiner that you know the standards. Then now the only benefit in this case is that is purchase contract costing 5 lakhs and the profits from the sale contract 4 lakh 50. So a provision should be made for the onerous element of 50,000, that is being the lower of cost of fulfilling the contract and the penal cost of 50,000. This 50,000 is nothing but 5 lakh minus 4 lakh 50, that is 50,000. So what, let's quickly summarize. First is this onerous contract and the benefit is purchase account, the difference between the profits and the purchase cost, that is 50,000. So a provision will be recognized for onerous element, that is 50,000 or 60,000, whichever is lower. In this case 50,000 is lower, so its provision to be recognized are the same. So the three nice questions, 2 questions were slightly trickier, but if you've seen it once you can surely get it spot on if it comes to the exam. Hope you listen properly and make full use of it. Keep going and all the very best and stay focused.